Hello, everyone. Good afternoon, and welcome to our F&O Bazaar live expiry day session. So we witnessed a gap down opening today basis on the geopolitical unrest, and currently Nifty is down 380 odd points. So today is the first weekly expiry of March month, and due to the gap down opening, expiry day outlook must have changed for majority of the expiry traders. I'll introduce myself. I'm Sonali Palande. I look after the derivative product at HDFC Securities, and I am joined by Mr. Nandish Shah, who is from the Prime Research team. Welcome, Nandish.
Hi Sonali, good
Yeah,
afternoon.
hi.
Thank you all
Good
for
afternoon.
joining. Good afternoon.
Yeah. So in this session, we are going to analyze the derivative data positioning, the option chain structure, key technical levels, volatility trends, and potential trading setups from both the intraday and positional perspectives. And since today we have opened with a lot of volatility, this particular session can add a lot of value to all of you to understand what has changed at the opening of the day, and how we are set up for the rest of the day now. So. I'll get straight to the first question, Nandish. First of all, we want to understand why the market is reacting to all of this scenario which is happening globally. So we would like to understand what's the current scenario globally and how the Indian market is set up in response to that, and then probably we will go towards our technical factors which are impacting today's expiry.
Yes, Sonali. Yes, first of all, as you mentioned in your opening comment, the geopolitical tensions. Basically, over the weekend, Israel's preemptive strike on Iran over the weekend. They have carried out this strike jointly with the US. And this has ignited actually geopolitical fears that led to a sharp fall in the global markets. US futures are also down by, Dow Jones futures is down by more than 400 points. Asian markets are down by between 1 to 2%. So that all has impacted our market also. Apart from that, as we all know, we are a net importer of crude oil, and we witnessed a sharp rise in crude oil prices. In the opening, it was up by 8 to 10%. Now the Brent crude price is up by 6%. So, and also the fall in rupee. The rupee is almost down by 50 odd paisa. So both this sharp rise in crude oil price and fall in rupee also weighed on the sentiment. So basically, the rise in geopolitical tension and the rise in crude prices and fall in rupee and also sharp fall in Asian markets. All these have led to a Nifty also falling sharply by around 400 points.
Okay, thank you for setting up a picture for all of us. Those who, did not take the update from, because it's the media is full of all the news, and it's like a bombarding of news at the media channel. So we just needed to understand what's happening in the crux. So thank you so much, Nandish. So first question to you from my side is that, so how derivative data was placed at the beginning of the day today after the gap down opening? And also, we have recovered from where we had started today. How the derivative indicators have changed and what are they indicating now?
Yeah, so first of all, let me discuss with you the and all the people who have joined about the yesterday data, about the Friday data. So is my screen visible?
Yes, yes, visible.
Yes, is my screen visible? Yes. So first of all, uh, the geopolitical tension started 2 days back, but if you see the Friday's data, actually, from the data you can see that some might have a preempted that some negative news is likely to come. So that is visible from the data. So as you can see here from the Nifty 50 snapshot, uh, in the Nifty future open interest, we witnessed 15% rise in open interest. Considering we just began this new series 3 days back from Wednesday, that this 15% rise in OI is very high, considering the first 3 days of the series. So we already witnessed sharp 15% rise in OI on Friday in Nifty future with 1.25% cut. So actually we witnessed aggressive short build up in Nifty future on Friday. Coming to put call ratio remained more or less stable at 1.61. So put call ratio did not have much impact, but as we have witnessed sharp fall in this sharp rise in OI, that suggests aggressive short buildup. Apart from that, uh, now come to FI's figure. FIs in index future, they have started selling, they have started shorting. As you can see here, out of that 3583 crore net selling, 3117 crore was in Nifty. And in Nifty futures, their open interest moved up by 16,000 contract. So in Nifty futures also they have created aggressive, in index future, and out of the Nifty they have created fresh short. So one end we have witnessed aggressive short buildup in Nifty futures. Second, we witnessed aggressive short by FIs, and also FIs in cash market also they were aggressive sellers. So net Friday's data was bearish. Even although expiry was not there for Bank Nifty, but as you can see from here in Bank Nifty also we witnessed 23% rise in OI with 1% fall. So in actually in both Nifty and Bank Nifty we witnessed aggressive a short build up on Friday. Coming to option also, as you can see from this option distribution chart, this blue bar is the for call option. We witnessed aggressive call lightning at multiple levels, 25, 300, 400, 500, even 26,000 levels. So all this suggests that Friday data was clearly suggesting bearishness to continue. Although we witnessed some geopolitical tensions, we witnessed starting of geopolitical tension over the weekend, but our Friday data was bearish only. Now coming to today's data, let me discuss with you today's data. So as you can see here, we have witnessed short buildup in Nifty future today also. All these three contracts, March, April, May, we have witnessed short buildup in Nifty. Moreover, put call ratio in the morning it was placed at 1 point more than 1. Now again it started falling to 0.86. So put call ratio has also started falling with aggressive call lightning at 25,900, 800. So today's data also suggests that this bearishness is likely to continue. However, we are already down by 400 points. That's around 24775. So we have seen a sharp fall already during the first 3 hours of the trading. So we are not ruling out the possibility of intraday bounce back because already Nifty is down by 400 points. But yes, positionally data and the technical setup remains weak.
Okay, so basis on the data, we have a strong clue that the things have turned very bearish. But what are the charts suggesting? Do we see the similar clues on the chart as well?
Yes, Sonali. So now coming to chart, 1 minute, let me open Nifty. So this is the daily chart of Nifty. As you can see here, yesterday only, basically on Friday, Nifty fell below 200 EMA. So primary trend turned bearish on Friday only. Now today Nifty is already down by 400 point, and it has reached to a support level. On the budget day, we made a low of on the budget day after budgetary announcement, market fell sharply, and we made a low of 24571. Today also, as you can see, the low was 24645. Even after budget day, we made a low of 24679. So this range of 24,500 to 650 is a very strong support area where market took support twice in the month of February. So yes, we have fallen sharply. Primary trend remains weak, but Nifty has reached near to a support where Nifty finds support 2 times in the month of February. But considering the primary trend, as you can see from here, this trend line, this is a falling trend line. Nifty has been continuously making lower top. Nifty is placed below all these important moving average 5, 10, 20, 21. So primary trend remains weak, but we can say that Nifty has reached to this strong support. Moreover, as the news flow develops, we might see a movement on the other side. So primary trend remained weak. One should not be bullish aggressively unless Nifty closes about 25,000 levels. But for today, you might see some technical bounce back, or you might see some short covering really during the day. In that rally, our advice is to sell unless view remains bearish till Nifty closes above 25,000 levels.
Okay, so if we have a sell on rise view, what is the level that we have to watch? 25,000 intraday.
In 25,000 is the positional level, but intraday Nifty has took resistance around 24,860 odd levels. So for intraday, the resistance is placed at 24,860. Unless Nifty closes about to intraday moves about 24,860, one should be bearish for intraday also. And on the lower side, support Nifty has taken support around 24,700 odd levels. So if Nifty comes to 24,700, we might see some pullback. But overall, for intraday also, unless Nifty close about unless Nifty trades about 24,860, view remains negative for the intraday also.
Okay. And how are we seeing the development in terms of the option chain? Because today the data might have flipped totally. due to the
Yes,
gap
yes. So
down.
let's move to the option chain. 1 minute. So this is left side is the call. This is the call data. As you can see here, we have witnessed highest addition in 24,900 call. That is 2.32 lakh shares, and even 21,000 added 2.34 lakh shares. And in nearby strike price, 24,800 as a 2.27 lakh shares. So both all the three 24,800, 900, 25,000 call almost added 2.28, 2.3 lakh shares. So this indicates that the resistance, Nifty is likely to find multiple resistance if it starts moving up. As of now, 24,800 to 900 is a strong resistance area. That's what the option data suggests. And on the downside, as you can see here, 24,700 put is having a OI of 2.36 lakhs, and 24,800 is the 2. It is also having a 2.36 lakh shares in OI. So 24,700, 800 is the range from the put side. That it suggests that my Nifty may find support for today. One must be clear that this is the only intraday levels we are talking about, because this is the data for the 2 days expiry only. So broadly speaking, 24,700, 800 is a support area for the today. That's what the option data suggests, and 24,800, 900 is the resistance that we can derive from the option chain and from the call data.
Okay, so 24,800 call and put writers are right now in a tug of war. That is what I can understand basis on the
Yes.
data. And once we get a direction from one of that side, probably it will be more clear for all of us. So I'll move next. I'll move to the next question, Nandiji. Do we see anything from the implied volatility perspective? Is it increased, or what are we seeing from those numbers?
Yes, yes. So first of all, let me speak about the India VIX. Actually, India VIX moved up sharply. As you can see from this chart, hopefully my chart is visible. India VIX up by 18%. It has almost reached to a high which was there around the budget day. So after budgetary announcement, India VIX went up to 16 odd levels. Again today it moved up to 16 odd levels because this rise in geopolitical tension. We have a holiday tomorrow. So yes, people might be hedging their positions through buying puts. And this rise in IV is mainly on the back of rise in put IV, as you can see here. Let me show you that also. So this is the option chain from NSE. As you can see here, 24,700 call IV now moved up, but half an hour back, the call IVs were around 17, 18. Now it has moved up to 20 odd level, and as Nifty has fallen sharply, Nifty is down by 400 point, and put IV has also moved up to 17, 18. It was around 12, 13. So now the call IVs have also started rising along with the put IV. This rise in IV suggests that though Nifty is down by 400 point today and it is going one way down, we might see a lot of volatility. This sharp rise in IV, even for the current expiry, suggests that we are likely to be very volatile. So coming to a level 20, as we saw from the option distribution chart, 24,700 is a very strong support area from the option distribution chart, and 24,800 to 900 is a strong resistance area. But yes, volatility will be there. Still more than 3 hours are left, and option data as an IV suggests that there could be a lot of volatility before 3:30 today.
Okay, so basis on the data, basis on the chart, we all have the bearish signals all over. But then, basis on all the discussion that we did today, Nandiji, what are the trading opportunities that one can find for the rest of the day on today's expiry?
Yes, yes.
So intraday and positional, if you have anything.
Yes. So first of all, as we just discussed, IVs are very high. So here one must be ensured, one must be very sure that whatever you buy, call or put, you should book profit with the small gains, because IVs are higher. And if market doesn't turn in your favor, as the day progresses, IV will fall sharply and you'll be in losses. So whatever you buy, you need to must buy with the stop loss and also book profit with smaller gains because IVs are higher, and so your gain will be limited. First of all, regarding view, yes, if Nifty comes to 24,700, one can buy call only for intraday, keeping a stop loss of 24,650 because Nifty is already down by 450 point, and Here the risk reward is net favorable for buying puts for the intraday. So if Nifty comes to 24700, one can buy a call for this series for intraday for with stop loss of 24650. And if on the higher side, if Nifty comes to around 24,800 to 850, one can buy puts. So overall speaking, our view for the market remains weak. Only as Nifty is down by 450 point, around 24,700, one can play for smaller gains by buying a call. Overall view remains weak. So if somebody is a positional trader, our view is that if Nifty comes to around 24,800 to 850, keep a stop loss at 25,000 and one can go short. So primary trend and overall view remains weak. Only for intraday, if Nifty comes to around 24,700, one can buy call for the smaller gains.
Okay, so for intraday, 24,700 to 24,800 is the important range where we can play contra. And for positionally, we can, sell on rise basis on the 24,800 levels. So these are the actionables that we have got. As Nandish also mentioned, the volatility has increased exceptionally. So all of the audience, it's a request to, trade carefully, always have stop losses. We also, share the recommendations coming from our research team time to time on the expiry day, or during the normal days as well. But today being the expiry day, there will be a more flow of recommendations which you can find on the dashboard, research dashboard on the InvestRight app and InvestRight web, both the places, or you can simply activate or enable your notifications of InvestRight app, and you will find recommendation notifications whenever the recommendations come from the team. So at least you will have the support from the research team, to have a better decisioning and, take informed trades. So thank you so much everybody for joining. Hope, the rest of the expiry day is good for all of you. All the best for the rest of the time. And thank you so much, Nandishji, for sharing your insights. Thank you so much.
Thank you, Janali. Thank you all for joining, and have a profitable expiry day ahead.